Now, Ibrahim Traore has led Burkina Faso to its biggest gold year on record, 94 tons in 2025, the highest output in the country's history. And it comes at a moment when the military government is tightening its grip on the mining sector by demanding a larger share from foreign companies. The figures were reportedly presented this week by Burkina Faso's Minister of Energy, Mines and Quarries. Now, the new numbers mark dramatic turnaround for a sector that was in retreat just 3 years ago.
In recent years, Burkina Faso has emerged as one of Africa's most significant gold-producing nations. Landlocked and historically dependent on agriculture, the country has steadily transformed its mining sector into the backbone of its economy. Today, under the leadership of President Ibrahim Traoré, Burkina Faso has recorded the highest gold production levels in its history. A development that is drawing attention far beyond West Africa. Gold has long been Burkina Faso's most valuable export, but the scale and pace of recent growth mark a notable shift. Production figures released by national authorities and corroborated by industry data show output reaching unprecedented levels despite ongoing security challenges and political transitions. For a country navigating insurgency, economic pressure, and diplomatic realignment, the surge has become a defining feature of Traoré's presidency. To understand the significance of this moment, it is necessary to look at how Burkina Faso's gold industry developed, how recent policy changes altered its trajectory, and why the current production boom is reshaping both domestic politics and international perceptions. Gold mining in Burkina Faso began in earnest in the early 2000s, following reforms that opened the sector to foreign investment. Multinational companies from Canada, Australia, and Europe played a major role in developing industrial mines, introducing modern extraction techniques and export infrastructure. By the mid-2010s, gold had overtaken cotton as the country's leading export, accounting for a substantial share of government revenue. However, critics long argued that while production increased, benefits to ordinary citizens remained limited. Royalties were modest, local processing was minimal, and profits flowed largely overseas. Environmental concerns and labor disputes added to public frustration, especially in rural mining regions. When Ibrahim Traoré came to power amid political upheaval, expectations were high that the management of natural resources would change. Traoré, one of the youngest leaders in Africa, presented himself as a reformer committed to sovereignty, transparency, and economic self-reliance. Gold, by virtue of its importance, became central to that vision. One of the administration's earliest priorities was to review mining contracts and regulatory frameworks. Officials argued that existing arrangements favored investors disproportionately and limited the state's ability to capture value from its own resources. New measures were introduced to strengthen oversight, improve tax collection, and increase the state's stake in mining operations. At the same time, the government moved to formalize artisanal mining, a sector employing hundreds of thousands of Burkinabés but long plagued by informality and smuggling. By issuing permits, regulating gold buying, and improving traceability, authorities aimed to bring more production into official channels. These reforms coincided with favorable global market conditions. Gold prices rose amid inflationary pressures, geopolitical tensions, and investor uncertainty worldwide. For producing countries, higher prices translated directly into increased export earnings. Burkina Faso, already expanding output, was well positioned to benefit. The result was a historic production milestone. According to official data, annual gold output reached levels never previously recorded, placing Burkina Faso among Africa's top gold producers alongside Ghana, South Africa, and Mali. For a nation of roughly 23 million people, the economic implications were substantial. Government revenue from mining increased, easing fiscal pressure and creating space for public spending. Authorities reported greater capacity to fund infrastructure, education, and social services even as security expenditures remained high. While challenges persist, officials argue that increased gold revenue has strengthened state resilience. International reactions have been mixed but attentive. Investors and commodity analysts have highlighted Burkina Faso's growing role in global gold supply, noting that African producers are becoming increasingly important as reserves elsewhere mature. At the same time, some Western governments have expressed caution, watching closely how political changes affect the investment climate. China, already a major player in African mining, has shown interest in deepening engagement, particularly in processing and infrastructure development. Chinese companies have explored partnerships aimed at expanding refining capacity and improving transport links. For Burkina Faso, such partnerships are framed as opportunities to move beyond raw exports and capture more value domestically. The gold boom has also reshaped domestic political narratives. Supporters of President Traoré see the production record as evidence that assertive leadership and policy reform can yield tangible results, even under difficult conditions. State media frequently highlights gold output as a symbol of national strength and independence. Opposition voices, however, urge caution. They argue that production figures alone do not guarantee broad-based development. Questions remain about revenue distribution, environmental impact, and long-term sustainability. Civil society organizations continue to call for transparency, community consultation, and investment in non-mining sectors. Security remains a defining backdrop. Burkina Faso continues to face armed violence in parts of the country, disrupting livelihoods and complicating governance. Mining operations, often located in remote areas, require significant security measures. The government insists that resource revenue is essential to restoring stability, funding defense efforts while supporting development. From a regional perspective, Burkina Faso's experience reflects a broader African debate about resource control. Across the continent, governments are reassessing how minerals are managed, taxed, and processed. Calls for resource sovereignty have gained traction, driven by frustration with historical patterns of extraction that delivered limited local benefit. In this context, Burkina Faso's gold production record is being closely watched by neighboring states. Some see it as a model for balancing investment with national interest. Others warn that aggressive reforms could deter investors if not carefully managed. The challenge lies in maintaining confidence while asserting control. Global markets are responding pragmatically. Gold traders focus on supply stability and production costs rather than politics alone. So far, Burkina Faso's output has remained reliable, reinforcing its reputation as a serious producer despite internal challenges. Ratings agencies and economic observers note that sustained production supports macroeconomic stability, though risks remain. Environmental considerations are increasingly part of the conversation. Gold mining, especially when poorly regulated, can damage ecosystems and water sources. Authorities say new regulations aim to mitigate these risks, but enforcement capacity is uneven. Balancing economic gain with environmental protection will be a long-term test. For ordinary Burkina citizens, the gold boom raises practical questions. Will increased production translate into jobs, infrastructure, and improved living standards? Can mining wealth be harnessed to diversify the economy rather than deepen dependence on a single commodity? The government has outlined plans to invest mining revenue in agriculture, manufacturing, and energy, seeking to build resilience against price fluctuations. Success will depend on governance, accountability, and regional stability, factors that extend beyond gold itself. Internationally, Burkina Faso's rising production feeds into a larger reconfiguration of the global gold industry. As traditional producers face declining reserves and higher costs, Africa's role is expanding. Countries like Burkina Faso are no longer marginal suppliers but key contributors to global output. This shift carries geopolitical implications. Control over strategic commodities influences diplomatic relationships, trade negotiations, and development partnerships. Burkina Faso's leadership has emphasized that engagement with external partners will be guided by national interest rather than alignment with any single bloc. President Traoré's rhetoric often frames gold as a symbol of dignity and self-determination. While such language resonates domestically, international audiences look for measurable outcomes, transparency, stability, and long-term planning. The coming years will determine whether production records evolve into sustained prosperity. For now, the facts are clear. Burkina Faso has achieved its highest gold production in history despite facing security and political challenges that might have constrained growth. The achievement underscores both the resilience of its mining sector and the central role of natural resources in shaping national trajectories. As global demand for gold remains strong, attention will stay focused on how Burkina Faso manages this moment. The choices made today, in regulation, investment, and governance will shape not only the country's economic future but also perceptions of Africa's capacity to leverage its resources on its own terms. In a world searching for stability amid uncertainty, Burkina Faso's gold tells a story larger than numbers alone. It is a story of ambition, risk, and the enduring question of how resource wealth can be transformed into lasting development.